Welcome back, everyone. I'm here with Brett from Trinity Financial. Glad to have you back.
Thank you.
And today we're going to be talking about, again, we've been doing a lot of talking about retirement, but today we're going to hone in on the 401k.
Yes, ma'am.
And I told you about this. I kind of want to learn more about it myself. So if you kind of just want to talk about when should somebody keep money in a 401k or just maybe roll it into an individual retirement account.
Right. So there's stages. So
Okay.
we're kind of joking around beforehand is what to do with the 401k. So a lot of younger people think that doesn't pertain to me. Fortunately, it really does pertain to anybody because the younger generation changes jobs so often that the worst thing they do is they have a 401k, then they cash it in, they pay a 30% penalty because they have to pay 10% early withdrawal and usually 20% taxes. So for the younger, under age 60, the best thing to do is to roll it into an individual IRA, okay, and try to preserve those assets. But as we're talking about, transition into retirement, what to do with the 401k, we always recommend that they put it into an IRA and multiple IRAs. We use different buckets. We have usually a liquidity bucket, an income bucket, and then a growth bucket for the IRA.
Interesting.
So it's not all in one investment, and that's why we recommend that they transfer out of the 401k. And again, the personal belief that if you keep it in the 401k, you don't have the personal advice.
Okay.
You don't get to meet with someone face to face. The 401k company will switch it into an IRA most of the time, which then they start charging annual fees. Our practice does not charge annual fees. So we believe that we're less expensive over the life of retirement to get it into an individual IRA, and then you're in control of it.
Right. So if somebody is making that decision between an IRA and the 401k, what is it important to pay attention to or that you recommend they do?
The first thing we do is look at the fees.
Yeah.
So if it truly stays in the 401k, there's no doubt if it stays in the 401k plan, the fees are less. But again, you don't have that personal advice because you don't have anyone looking over it, telling you when to transfer the money to safer investments or how to get the money out. You also don't have anyone looking over it to tell you when to take out the requirement of distribution, which we talked about last week. So if they keep it in the IRA or the 401k, it sounds harsh, but they're kind of on their own.
Okay.
Okay. If they switch it to an IRA within the 401k company, they have someone on a telephone, but again, it's very limited advice because they didn't take the time to get to know them personally.
Right. I think the biggest thing that stands out to me is those fee differences between the two. Would you say that's a common?
Fees are a big thing.
Yeah.
Philosophically, it becomes a discussion. If you put 100 advisors in this room, you're probably going to have 100 different opinions.
Yeah, right.
I mean, our opinion is after 40 years, we do not charge annual fees. People ask how we get paid. There's a Class A share public offering price, which is a premium that they pay on the net asset value. We get a portion of that. So it's a one-time charge. But then if you and I were to work together for 20 years, there's no more charges on that money.
Oh, nice.
Yeah, so again, philosophical differences on the fees. And we'll just leave it at that.
Yeah.
We don't charge them.
Yeah. So any rollover mistakes when making that,
Yes.
change? Yeah, what would you say are the most common?
Thinking they can take the money in their name and then rolling it over. If they receive that money and it's made out to their name only, the 401k company has to withhold 20%.
Okay.
So they lose 20% right out the bat. Now, they can roll it over and they can try to get the money back, not try, but they can get the money back when they do their taxes the following year, but they lost the growth on that money.
Yeah.
So trustee to trustee is the best way to transfer that money. It's the smoothest, cleanest, and then when they get a 1099, it's already coded right, so when they take that to their tax person, they know that they rolled the money over.
Right, absolutely. And learning more about this, I know me and you were talking beforehand about an upcoming seminar that you guys were doing, I believe you said in Freeport.
Freeport, yep. We had Rockford 2 weeks ago, now we're in Freeport.
Okay.
Tuesday and Thursday, 6 o'clock at the Freeport Public Library, and we're looking forward to that. It's Medicare Social Security information. If they can call our office or they can go on our website, Trinity IFS, and get more information for that.
Yeah, absolutely. Like you said, you heard it here. You can go visit them at Freeport, or you can just call Trinity Financial. That number on your screen is 815-288-5800. But Brett, that's all the time we do have for today,
Wonderful.
sadly. But as always, it's great talking to you, and we will be back after the break.